Ever wondered how some people pick winning stocks? It's not luck, it's analysis. And today, I'll show you exactly how beginners can analyze a stock like a pro. Before buying any stock, you need to know what you're getting into. Stock analysis helps you reduce risk, make smarter choices, and grow your money over time. Start by understanding the company. What does it do? Who are its customers? Is the industry growing? A great business starts with a strong, simple story. Next, check the company's financials. Look at revenue. Are sales growing year after year? Then check net income. Is the company actually making a profit? Debt can be dangerous. Look at how much debt the company has. If it owes more than it earns, that's a red flag. A strong balance sheet shows long-term stability. Valuation tells you if a stock is overpriced. The PE ratio compares stock price to earnings. A lower PE might mean a better deal, but compare it to industry peers. How competitive is the company? A strong moat, like brand loyalty or patents, can protect profits and make a stock more valuable over time. Is the company innovating or entering new markets? Growth potential shows where the company might be in 5 or 10 years. That's where real gains happen. Good leadership matters. Look at the CEO's track record. Have they grown companies before? Are they shareholder-friendly? Great companies start with great people. Don't just follow the hype. Avoid chasing trends or skipping research. Buy with confidence, based on facts, not FOMO. Here's a quick recap checklist. Understand the business. Check financials. Evaluate debt, valuation metrics, competition, growth potential, leadership quality. Ready to start analyzing stocks on your own? Drop your favorite stock in the comments, and don't forget to hit subscribe for more simple investing tips every week.